Support and resistance. These things have been around since trading itself, but for some reason, very few people really get how to use them correctly. If you're new and just starting to figure things out, this video is exactly where you should start. So, what exactly are support and resistance? On any price chart, you'll see certain areas where the price keeps stopping and reversing. Usually, these spots are pretty easy to notice. When the price is going up and suddenly hits some invisible wall and starts going down, that's called resistance. It's like a ceiling that won't let the price go higher. On the other hand, if the price is dropping down and hits something at the bottom and starts moving back up, that's support level. It's like a floor preventing the price from falling lower. Basically, these are areas where buyers and sellers fight it out, trying to decide where the price will move next. Levels can be broken down into two main types. Local levels. These are the ones you see clearly on smaller time frames. The main ones you'll use for day trading. Global levels. Bigger, more important levels you'll see when switching to higher time frames, like 1 hour time frame. Usually, these contain several local levels inside them. Also, levels can be either predictable or unpredictable. Predictable levels show up for clear, understandable reasons. Here are some common examples. Round price numbers, like 1.5 instead of 1.452. People naturally set orders around these numbers because it's psychologically easier. Another instrument that can predict levels is Fibonacci. That's a whole separate topic. But briefly, these are lines that show where the price might pull back before continuing a trend, or even reverse. Like I said, Fibonacci deserves its own big video, which I'm planning to make in the next few weeks. This particular video, though, is about levels. Random levels are those that appear without any obvious reason. You see them on the chart, but can't logically explain them. Basically 70% of all levels. I want to start making money online, but I don't know where to start. What if I lose my money? I hear this all the time. Look, trading isn't some magic button to get rich overnight. But if you want to try it the right way, without wasting money or months figuring things out, here's how. I trade on Quotex, and right now, you can copy my trades for free while learning in real time. No upfront fees. I'll get a commission from the platform instead. That means you can test everything on a demo, see how it works, and decide for yourself without spending $1. It takes minutes. You get the currency pair announcement. Open it on the platform. Then you get the signal. Place the trade. And that's it. Will this make you a millionaire tomorrow? Of course no. But it will get you started, you'll see how it works, and see your first profit without risk. This is the easiest way to step into trading. Just check it out and see if it's for you. Click the link, get set up, and let's go. Let's move on to something even more important. How to actually trade these levels. When you're dealing with support and resistance, only two things can happen. The price can either break through a level or bounce off it. Here are 4 scenarios to clearly explain when to trade breakouts or bounces. Scenario 1. Both global and local trends are going in the same direction. For example, both are going up. If price hits a resistance level, you wait until a strong candle clearly breaks that resistance, then enter a trade going upward with the trend. But make sure there isn't a stronger global level above. The price needs room to keep moving up. Scenario 2. The global trend is upward, but the local trend is downward. If the price keeps testing a local resistance level from below, wait for a breakout upward and then enter. Scenario 3. Again, global and local trends go in the same direction, but this time the price hits a support level. Here you trade the bounce upward off support, following the main trend. Scenario 4. Again, the global trend is up, but the local trend is down. The price hits a support level. In this case, I recommend skipping the trade, because there's not enough confirmation besides the global trend. Let me share some key tips from my own trading experience. Always mark global levels. on higher timeframes. Global levels are respected more strongly by the market. Don't treat support and resistance as exact lines. It's much better to use zones, which helps avoid false breakouts and reduces stress. Combine levels with indicators. Indicators alone aren't perfect, but if support or resistance lines up with an indicator like a moving average or MACD, it gives a strong signal. That's it for now. Thanks for watching, and I'll see you in the next video.